Hello everyone, how's it going? In today's video, we're going to go over Mullen Automotive, trading under the ticker symbol MULN. The market is still very volatile and active over the past few months, and even more so over the past few days, as well as seeing this degree of speculations and anticipations building up. In this video, we will go through the latest fundamentals, the price actions, my analysis, as well as my recommendation to hopefully help you make the best decision possible. Before we begin the video, I'd just like to state a brief disclaimer regarding my videos, what are they about, and what they are not. What is presented in this video are going to be my opinions and interpretations on how things are or will be. They should not be considered as investment advice and should not be watched for other than, entertainment purposes. They may be able to help you make more educated decisions, but that shouldn't be used as the sole material for the decision making. Most of my analysis is done in the immediate past or just a few days before the uploading of those videos, and the price action may no longer reflect what you currently see on the chart by the time those videos are uploaded. But nevertheless, it doesn't really matter that it's not the latest. It is still useful as a tool to analyze the current momentum. Also, the analysis will try to cover the stock as comprehensively as possible. So it's going to talk about more factors than just the latest news or the price actions. For example, the company's financials, stock market trends, long-term perspectives, and shareholder behaviors are also going to affect the timing, the quantity, and the actual decision. Since most of my viewers are watching the videos for the first time, it is important for everyone to consider all these factors when they see my videos. So, with that being said, let's dive into Mullen. Mullen is an EV manufacturer, distributor, and marketer. It acts as a holding company for the brands and the companies they have bought so far, the latest one being Elms and the EV trucks. The company began operating back in 2014 as a successor to Coda Automotive. Another venture that Mullen was involved into was when the company was still called Mullen Motorcars, and it created Mullen GT, one of the world's earliest supercars in the market, back in 2007. Overall, it's fairly convincing to say that Mullen is a veteran in the field, and that at least we can say that they have been around for a sufficiently long time, that they're not just here for quick grabs or because it's fashionable. Now, the question is whether they have the means to stay in the game. The sector is known to be highly capital intensive, and it relies on other industries that may also not be fully mature in their functioning. There is also the challenge of keeping the valuation multiplier for EV companies like Mullen, Tesla, NIO as high as possible, and avoid the classification of industrial companies or car manufacturer. So basically what I'm trying to say here is the reason why those companies can worth a lot of money is because they are valued based on a different formula compared to industrial companies, right? Or traditional car manufacturers. They're basically valued like Silicon Valley startups. And if one day people's mentality changes, then a lot of things may happen very quickly in its disfavor. So the recent price action has seen Mullen's share price reaching around 33 cents, down by more than 40% compared to the peak of the stock. The price movement seems to be influenced by the market mood in general, not just towards Mullen itself, but towards every single EV and even like growth stocks as well. The recent news have been positive for the company, explaining the fact that the news will not be able to stop an ongoing trend, but may either slow it down or to confirm it. So, Mullen fell as low as 26 cents. The recent news, the positive ones, have been, in my opinion, important to see the stock getting back. Overall, the current short-term price action suggests that the downward pressure needs to be able to stay there for a prolonged period of time before continuing. I can say with a fair level and increasing level of certainty that the recent retracement has now met its bottom, and that the price has a true probability to resume the bullish tendencies. things are still relatively uncertain at the moment. So even when I say, I believe that this is the bottom, some caution is still always advised as far as capital allocation is concerned. Regarding the long-term price actions, despite the recent upward momentums, the company has been having a mostly bearish trend over the past years, having traded between $5 to $10 for a long time before peaking around $15 and finally falling to around the penny stock levels it is in now. What this may tell us is that Mullen has been hard hit by the ongoing stock market downfall, and that its own fundamental weaknesses certainly didn't help. This assessment recently began to change, but in my opinion, it still hasn't reached a convincing level yet. So that to a point still explains why Mullen is a stock that I would recommend to trade instead of investing into, regardless of the recent distribution contracts or the short squeeze. The interest surrounding Mullen is the expectation, and by that I mean for the most part, the expectation seems to be to scalp a quick gain in a matter of days or weeks from a short squeeze, not necessarily yielding dividends from its own operations. With that being said, things can always change rapidly in this field. So the idea of investing in the long term should not be completely ruled out. Meanwhile, the online communities, along with media outlets, have been skeptical about Mullen regarding the capacity to turn the company profitable, and it has shown its discomfort with periodic lack of transparency on key issues, such as who are their commercial partners and clients. Of course, there remains a pocket of resolute optimists who believe that whatever happens to Mullen, it is always a good news, because if it goes up, it's going to give them gains. If it goes down, it's going to give them opportunities to dollar average in. In recent days, the promises given by its CEO have rekindled some of the optimism, not just from a small group of fans, but started to turn the public opinion and discourse about the company as well. So overall, I would say that Mullen is commented online mostly because of the price actions and the sporadic speculations triggered by the company's price volatilities, or just the PR releases by the company itself. Those speculations tend to come from the prices and then extend into other areas to support the reason why we can see it on a chart. But usually it's not the other way around. Meanwhile, the macroeconomic trends continue to be challenging. The increasing interest rates, the capital flights from growth and EV stocks back to other sectors, the bearishness that is expected across the board, and also things that will plague the sector of EV in the years to come, which might be the supply chain issues, the fact that we are missing key components to finish cars, the valuation model of EV companies being reevaluated, and also, and this by the way is not a secret, to assert that one of the most important factors that influences the course of action of an EV stock is the performance of Tesla. Recently, things haven't been so well regarding Tesla, and in a way, this could affect the upward potential for Mullen going forward. With that being said, let's also take a look at the company's financials. Regarding the cash balance, it has been mostly stable, although recently decreased somewhat from 105 million to 84 million. This is not overall a big issue, but if, let's say, the cash level dips down below 30 million or even 20 million, then we can say with a fair level of certainty that something is not right, and they will have to rectify the situation either by having further dilutions of the shareholders or by taking on more debts, neither of which is very good. So when we see the cash balance being relatively stable over time, this is always something nice to see. The liabilities. So recently Mullen has removed millions of liabilities, which is beneficial to the long-term survival of the corporation. Now, the market's timing is making things to be read in a more convoluted manner, because as the company has announced that it has removed millions in liabilities, the market has reacted negatively. I don't think that those two events are related. I still think that it's always a good thing to remove or to reduce the level of liabilities. This will keep the company, as far away from insolvency as possible. Regarding the profitability, Mullen has no revenue and has not had any revenue since the beginning of 2021. The research and development budget has been increasing significantly over time, while the general expenses has either remained constant or down. So this is overall a good sign, but operating losses kept digging holes within the company, which may cause the company to continue dilutions if the situation persists. So hopefully we will see some, release of the pressure with the IGO distribution contract going into force. Overall, the financials of Mullen shows us that the big picture of the company is still relatively decent, or at least acceptable. The company is doing its best to stay afloat, to control its cash levels, and to keep the expenses down. But still, positive cash flows need to happen from an organic manner to avoid further dilutions, which may cause, delisting, loss of faith of shareholders in the company's leadership and management. Now, let's also move on to shareholders. Shareholders are mostly retail, who are volatile and reactive to price action movements. That makes the stock decent for trading and speculating. There are some institutional shareholders, and their number might be increasing over time. But still, it's not significant enough to change my view that Mullen is good for trading, not necessarily for long-term holding and investment. At the same time, the lack of significant institutional participation also suggests that there is no real trust on the institutional side. Even though it's not always a must, I would say that it doesn't really help with a company that we know has kept away key information from the shareholders, that we know is on the verge of going to be delisted if it cannot raise above $1, which is still some distance to go. So the major risk factors, as mentioned earlier, remain the interest rates, the fear factor, the VIX, the dwindling money supply available to get into riskier sections of the economy, the conflicts around the world, the supply issues around the world, and also the fact that Mullen's shareholders might lose faith into the company as time goes on. Another factor that we must also mention is that one of the major catalysts why people are buying Mullen shares for is that people are expecting a short squeeze. So Mullen has a large amount of short orders because many people believe that it's going to keep going down. Now, if the price goes up, people having short positions may be forced to redeem their shares, because as long as their shares remain open, like as long as the short order remain open, they will have to pay financial fees for it. So the longer it drags, the less they're going to make on a profitable position. So this in by itself is currently the biggest catalyst that really motivates most traders to buy Mullen shares, which may or may not occur at all. So with that being said, it's really important to control the exposure to a stock, regardless how interesting the price action seems to be. And at the end of the day, the opportunities will always be there. But the capital might no longer be. Does it really mean that Mullen will take off from here onward? No. So there's never something that is absolutely certain on the market. But with the information that we had a few weeks ago and nowadays, it seems like it's reasonable to believe that it would be worth our time to place a position now. So far in the week, the company has demonstrated its willingness to push the stock higher, and it also showed some level of interest from the financial markets who wish to have the capacity to invest into the company long-term eventually. So My recommendation is to buy in now because the retracement seems to have finished. But also at the same time, it's very important to control your overall allocation and the allocation over time. So in terms of total overall allocation, I would recommend between 0.5 and 1%. And every single time you want to buy Mullen, try to keep it below 1/10 or 1/20th of the capital that you have allocated for Mullen. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings, which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect the investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks, with the expectation that they will be loaned to businesses. Normally that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up, or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, when it comes to the price trends of the market, the degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.